the market overall is extraordinarily nervous. There's a lot of stuff going on around the world. I mean, obviously we have inflation and interest rates in the United States. We have Russia and the Ukraine. We have China and Taiwan. We have North Korea, sending missiles. We have Iran backing the Houthis, attacking allies of the United States. That's a lot of action all going on at once. And I think that there's an innate nervousness that's permissive and certainly impacting the confidence level of the investor base. Having said that, the peculiar part of it is that the economy is doing really well. The activity level seems to be one of accepting the virus and, in effect, getting around it. And the fact that Omicron has been much less of a threat and certainly much less of a serious threat has gone us from, not knowing what to do to trying to figure out how to live with it.
So you add all of that up, and you mentioned the nervousness investors feel. We did see the VIX back at the highest level since November of 2020 yesterday. People are not feeling comfortable, and that's one thing for an average investor. Somebody like you, when you see turmoil like that, does that present opportunities, or do you think there are too many things to be concerned about at this point?
Well, I'm not an investor in the Nifty 50. Right. And so, stocks like Apple and Netflix, et cetera, have an impact on me because if they miss or don't perform well, it affects the overall market. But generally speaking, I probably fit into the investor who invests in the risk-off phase of the market. And that part of the market has been less volatile, but nonetheless impacted by the lack of confidence by the investment community.
Let's talk about office real estate first. That's an area that you mentioned. Omicron has not been nearly as concerning as Delta or some of the variants we'd seen before, but you're not seeing workers back in droves to offices, at least in the big cities. In a place like New York City, it's probably closer to 30% occupancy. Not the same story through a lot of other places in the country. But this is something that I don't think many people at all thought would last for this long. We're a couple of years into this and still not seeing people back in force, at least in some of the big cities. Caught most of us by surprise. Does it surprise you?
Well, I think that you got to start with this with an understanding that the office market was oversupplied before COVID. We had a phenomenon called WeWork and shared offices that, in effect, took an awful lot of existing office space and, in effect, leased it when there really were no tenants. So COVID, in effect, reversed that process. So I think you got to start with the fact that we had an oversupply to begin with. COVID has only added to it. I don't believe that working from home is much of a solution. And just like school children don't do well with virtual teaching, I don't think that you can motivate by modem. I don't think you can assess people by Zoom. And therefore, I think you need to be in the office. We've been in the office most of the time, and it creates a positive flow for people and allows us to get a lot more done than if we had to limit ourselves to a virtual office space. So I would expect that the office market is going to get filled and filled, as soon as COVID becomes less of a risk. And I think that there may be some changes. We may see, people, working 4 days a week. But ultimately, the amount of time people spend in the office is going to be very much related to the demand for their time. And there are a lot of parts of the economy that are doing very well and need people to work on them. And I think that's going to be the determinant of how fast office space fills up.
Shepard Smith here. Thanks for watching CNBC on YouTube.